Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on Twitter. I'll sprinkle in my opinions as we go. It's generally related to three topics: wealth building, financial topics, and commodities. Let's dive in. Let's see what's going on and what people are talking about. If you want to follow me at Finding_Finance, and if you want to join our community, finding-value.com, that's where I go into individual companies, sectors, and whatnot. Z4 says a few numbers for thought. This is not news, but follow up on LBRT's comments. We thought we'd update our monthly table graph for generation share. So, I know a lot of people, energy investors that watch this. I'm an energy investor, and this is the mix: 4% solar, 10% wind, 6% hydro, two other. Coal is 16%. Natural gas is the lion's share of electrical generation at 43%, and nuclear is 18%. What I would like to see is I'd like to see nuclear and natural gas get a lot bigger. Eliminate coal and eliminate some of these other ones. But I don't think that's going to happen. I think we're going to continue to grow all of them. Crude oil markets are threatening a major breakout at the moment, and therefore we need to pay close attention to what's going on in both grades. I've got crude oil here. I'm going to pull it up. So this is the crude oil futures pricing. I grabbed a fractal from last bull market. This fractal is a company. It had the three distinct waves. And look at how well this aligns with the fractal of oil. Oil also pulled out and went to the top of this. And again, I'm not on logarithmic when I drew it on logarithmic, but it is doing a retest. We also are getting a breakout here, and it's starting to run. Now, if I were to look at the fractal, I overlaid it, I shrunk it and stretched it out to overlay on this. You can see how well it fits over it. Now, if we were to replicate what the fractal is going to do, this is kind of where I think it could potentially go. I don't know if the path will be upward and that straight, but I've got a peak around, probably between $400 and $500 is probably where my guess it would be. We'll move on up, and then we'll have a pause point for a while, and it'll pause in the 200s, according to this fractal. A fractal is the way that humans trade with each other. It's a pattern that is deeply ingrained into the herd and the psychology of the herd. And this looks about right. We've got the three hump consolidation. We've got a break to the upside. We've got a first pullback. So wave one, wave two, wave three, wave four, and then wave five is up there, depending on how big wave five is in the blow off top. Another thing that looks really interesting is the crude oil to gold ratio. So this is the crude oil to gold ratio. This was an outperformance of crude oil to gold, an underperformance of gold outperforming crude, and we've broken out. And it looks like to me that we have got a nice big bullish engulfing here that's ready to work its way on up. So I am incredibly bullish crude oil. I think it's time to potentially take off. And I did listen to a debate between Adam Rosenswag and Doomberg. What I'll say there is I think that Adam is right and Doomberg is wrong. You must first find the oil and then you can produce it. We have been producing far more oil than what we've been finding. And at some point, when you're moving at exponential speeds, I would think that we're going to get some friction in the system where crude oil is really going to take off for a period of time. And the imbalance between production and what we're finding is like 3 or 4 barrels to one right now. I mean, it may even be more than that, because that was a little while back when I was looking at it. So I think we're going to get a squeeze in oil at some point. Is that point right now? It could be. It could be. And so you can throw in geopolitical risk, all sorts of stuff in there. Wind generation yesterday was an exceptionally dismal 336.4 gigawatt hours. Not only was this down minus 75% versus last year, it was the ninth weakest wind generating day in the last 5 years. Remarkable given the large increase in capacity in that time. This has significantly nat gas boosted power burn. And we'll take a look at that. But look at how little wind is generating in terms of electricity versus history. And this is the power burn for natural gas. I wanted to put that in there. Look at the increased demand for power burn. This is for electricity. Power burn is for electricity. Way higher than the previous years. Way, way, way higher. And that's due to this low wind generation. The swing producer is nat gas. So, looking at this, it says what a difference a week can make after minus 326 billion cubic feet of nat gas storage withdrawal. The seasonal accumulated withdrawal jumps from the single smallest to date draw to the third largest to date draw. Sell the news action is in full swing, but the withdrawal is unequivocally impressive. And when you look at the to date accumulated stored injection, this is kind of average. You can see 2019, 2022 is the red. You can see how this kind of is falling, and we're kind of in the middle of all of it. So I would say that's pretty much on the 5-year average. But we're lower than a lot of these years in terms of pricing. I think it'll come back. Zoltan Poser said the following sectors will go up in value in the next 10 years because of the geopolitical and global monetary reshuffling. Gold, which I view as precious metals, oil and energy, freight transport. And that's what his opinions are. And we are positioned in freight transport, precious metals, and oil and energy. And here's the shipping costs are rising aggressively due to geopolitical tensions here in January of 2024. Look at all these spikes here. And I wonder how long it's going to stay elevated like that. Robert Friedland says copper markets are a powder keg ready to explode, says Friedland. He thinks that there's a deficit this year, which is what I think too. We're going to eat through inventory, and he thinks that copper is going to go up to $9,500, $10,000 a ton. And he's ultra bullish every time I listen to him about copper over the next year or two. And I think we should be too. TikTok, Fed's reverse repo facility hits new low of 557 billion. Money exiting this facility goes into T-bills for higher yield. When this is empty, less demand for bills, rates go higher. So they're using the reverse repo to buy bills, treasury bills, to keep the rates down. We'll see what happens here when this starts to run out, and we are coming down quite aggressively here on the right-hand side, and we could probably hit zero over the next few months, probably. Crude oil, says Warren Pies, here's oil's typical path once both the technicals and positioning components of the 3F research model flips to a buy. Points to mid to upper 80s by the end of first quarter. So his projection is mid to upper 80s by the end of first quarter. Oil's average path in 3 months following technical plus positioning buy signal of plus 15%. We nailed this bottom, guys. We nailed it. And hopefully the equities go up quite a bit. URNM gap is filled. We've got a nice little gap here that's being filled. And we've got the pullback. So hopefully we can get a big move to the upside. And we need to see some buying pressure here first. It's generally what we see first. But that gap is filled. Is anyone still doubting HRH ABS will and intent? I'm not. So Saudi Arabia's oil exports obviously declined since June of 2023. And are these exports voluntary? Do they voluntarily pull this back? Or, I mean, I think some of it is, yes, but I have noticed that they've got a lot of tenders out to increase production. which is interesting as well. Has no one else noticed this from Q4 GDP report? Annualized interest on the federal debt now exceeds 1 trillion and is projected to breach 3 trillion annualized rate by Q4 of 2030. Insane and unsustainable. Oh my gosh, guys, look at this move in the interest payments in billions of dollars quarterly. 3 trillion by 2030. Paul says, let's re-examine how tight balance is with things more or less back to normal. Supply is 102.5. This is for natural gas. Demand is 14.2 plus 0.8 is 107.5. You take the difference, we are minus 5 billion cubic feet tight. We're having draws or deficits. And that's what I've got for today. I know this is a short one, but that's all I could find that was that interesting. Give me a thumb up for the content, subscribe to the channel, and we'll catch you guys next time. This is Finding Value.